Hello and welcome to this second edition of Blitheway Business News' Driving the Revolution, where we're looking at the impact of the move from the carbon economy to the electronic economy or the electron economy and its impact on the mining companies and the mining industry and the mining supply chain. On today's panel, I'm joined by Dan Bloor, Richard Williams and Willaim Dawes. Gentlemen, can I just come to each of you in turn and ask you to give a quick introduction to yourselves and your company. Daniel, can I start with you, please? So over to Daniel Bloor.
Cheers, Tim. Good morning. So I'm Dan Bloor, CEO of Livista Energy. Our focus is on converting lithium, spodumene and carbonates in the European Union to supply lithium chemicals.
Thanks, Dan. And now to Richard Williams. Richard, please introduce yourself.
Thanks, Tim. Richard Williams, CEO of Cornish Metals. We are focused on exploration of our Cornish assets, looking for copper, tin, zinc. So we're exploring the United Downs project, and we also have the South Croftey tin project in Camborne and Poole.
And finally, I'll come to Willaim Dawes. Will, can you give a quick intro to yourself and to your company, please?
Yeah, sure. So Will Dawes, CEO of Mkango Resources. So we are developing a rare earths project in Malawi and a rare earths separation project in Poland. And we also have an investment in a rare earth magnet recycling company called Hypermag, based in the UK.
Well, thanks, gentlemen. Let's dive in. I mean, the reason we're here is we are seeing an increasing demand for the metals and minerals that Will and Richard are mining or hoping to mine, and the lithium that Dan's hoping to process. What's driving it? Is it simply that we're all moving to electric vehicles, or are there other factors at play here? Will, can I throw that one to you first? What's driving this increase in demand?
Well, certainly from a rare earths perspective, the sort of EV revolution is certainly driving that demand. I mean, rare earths in particular, neodymium and praseodymium, are used in the rare earth magnets that go into the electric motors for an electric vehicle. So, and really that demand is really only just sort of taking hold, and we're going to see a sort of wholesale transition in coming years. So from a rare earths perspective, certainly that is going to be a key driver in the future. Also wind power and the green transition, and rare earth magnets are used in wind turbines, in particular direct drive wind turbines for offshore generation. So again, another key driver, and also the drive towards miniaturization more, and also use in consumer electronics as well. So from a rare earths perspective, that's where the real growth drivers are coming from going forward.
Richard, from your perspective as a guy looking into copper, tin and zinc, what is driving demand?
Yeah, I think just to add to what Will said, it's really these really enormous ambitions by governments around the world to shift away from reliance on fossil fuels. It's to get into electric vehicles, renewable power storage, and so really, it's a global shift into what we call the technology age. A lot more people working from home, so the demand for better internet connections, renewable power, all of these things. So really a shift away from traditional commodities and into things like rare earths, tin, lithium. So I think governments and industry is trying to move as quickly as it can to achieve these ambitions.
Dan, you're, I suppose, a step further downstream in the supply chain, because you're looking at building a factory to process lithium. You're maybe therefore, I suppose, one step closer to the end user. What's your perception of what's driving the demand?
Yeah, look, I think both Willaim and Richard have touched on it well. I mean, I think the explosion in the purchasing of electric vehicles, driven by both legislation and a change in environmental consciousness, is really driving forward this growth in the sector. But for us personally, within Europe, what we're seeing as more and more of a core to this subject is the fact that localization of supply chains is starting to become more and more important. As you quite rightly say, we want to be as close to the end user as possible. And when you're producing high quality battery grade chemicals, it certainly helps to be within their neighborhood. So we're seeing a strong support to build that, or as much of the supply chain as we are in Europe. Of course, it helps if you have a raw material asset where you can supply from within the region. But where those assets are not readily available, you are reliant upon external supply. And as such, there's as much of the supply chain you can bring into Europe, the better. And we've seen from Šefčovič at the European Commission, he's very keen to take hold of as much of that supply chain within Europe as he can.
Well, I was going to come on to that point because it's almost impossible these days to have a discussion about electric vehicles, rare earths especially, without I suppose the enormous presence of China in the global economy being referenced. So let's just look now at Europe. What's the significance? What's the importance of a European supply of the raw materials that we're going to need for our vehicle industries, for our electronics industries? How vital is that to you as miners? And Richard, can I start with you?
Well, I think you hit the nail on the head there. It's really all about security of supply. I think, what our focus is Cornwall, and the opportunity down there is tin and copper, plus associated metals. But, in the case of tin, 75% of all of the mined tin today comes out of 3 countries in Southeast Asia, China, Myanmar, and Indonesia. And, we've seen over the last year some of the problems related to shipping, availability of semiconductors, circuit boards, car manufacturing being suspended because they haven't got access to some of these materials. And yet, in Europe, we have these geological environments that are supportive of, extraction of tin, lithium, copper. And I think it's important that we have our own domestic industries rather than becoming a kind of almost service sector economy that we have become, where a lot of manufacturing has been outsourced and you're not really in control of the products that you're getting at the end of the day. So security of supply is really important. And I think that's the main thing that we're looking at, and governments are starting to recognize that.
Well, Dan, you raised the topic, so can I come back to you? What's your view on the security of supply within Europe?
Yeah, no, I think it's exactly what Richard's saying. But what's important to remember is Europe's not the only economy that's growing. It's not the only electric vehicle market that's going to go from small demand today to large demand, and possibly 30% penetration is the numbers touted by 2030. I speak exclusively in lithium here, but Europe's going from 0 tons produced today to needing 350,000 tons by 2030. At the same time, China and Asia, their market is also going to grow. So, from a 300,000 ton today market, it could be 2,000 tons by 2030. So we can't rely on them being able to service Europe at the same time as trying to grow their capacity to supply their own market. So Europe really does need to take control of the supply chain and ensure that we're not left behind in the race to electrify.
I suppose we also need to look at other markets which might require your products like, I guess, North America. Will, can I just come to you, because I do know that you've been working closely with people in North America. You've also got your own mine, refine, recycle approach to mining, and you're not just in Malawi. You've also got a presence in continental Europe. So give us a different perspective, if you will, please, on yes, the importance of European supply chain, but also perhaps how you're looking at the American market for your rare earths.
Absolutely, and I think the rare earth sector is very concentrated in China, both in terms of supply and demand, and that sort of concentration of supply has certainly spurred on development of independent supply chains. I mean, I think and we are sort of focused on European markets with the projects in Poland and in the UK, and then fed from Malawi. But really, the European, the location we chose in Europe, in Poland, for the separation was really driven by the competitive advantages of that site. And that site and the products from that site can serve, not only European markets, but also, US and other markets as well. I think one of the challenges in both the US and in Europe, and something that China has done very well, is to develop the full supply chain. So not only the mining, but also the but also the sort of separation and the metal alloy making and the magnet making and the recycling. So what we're doing is going as far as we can in terms of the supply chain, and then working and cooperating with other groups in terms of the other pieces of the supply chain that really need to fall into place to create that fully independent supply chain.
Let's stick with you, Will, because I'm going to want to move on a little bit, because we're talking about the things that you're producing and mining and processing, and the overwhelming theme is that demand is increasing. So if demand is increasing, what's that doing to the markets, and what are you seeing the market reaction to rare earths? So what are prices doing, and how's the market handling that?
Well, I mean, just focusing in on neodymium is probably the sort of key value driver going forward for most rare earth deposits. Neodymium is used in the rare earth magnets, and so we saw a few years ago, prices bottomed at around $35 a kilogram. We're now seeing, and that was, I'd say bottom of the cycle, most definitely. But now we're seeing prices around the $90 a kilogram level. And, most forecasts that I've seen for long-term prices are probably $100 a kilogram plus. And I think, going forward, the industry structure is changing in the rare earth sector. We're going from a situation where electric vehicles, for example, make up actually a pretty small proportion of demand at the moment. But, we expect that to grow very significantly and to sort of drive at least a doubling of demand in that sector. And that change of industries, change in the industry structure really drives a change in what the long-term price expectations are. And certainly with electric vehicles, most of the sort of cost in an electric vehicle is in the lithium battery. What a rare earth magnet enables you to do is much lighter than the alternative. So if you can have, it means you can have a smaller battery, which means a lower cost vehicle. So that means the industry can support higher prices. So that's why we are very comfortable with higher long-term prices, supporting new production coming online to sort of really feed this demand growth that's coming through.
Okay, thank you. Richard, I'll turn to you. Are you optimistic about what the markets have in store for you and tin and copper?
Yeah, I think tin is, the perfect example of what we're seeing here with this kind of shift towards technologies and move away from fossil fuels. Tin price, bottomed out about a year ago when COVID started at around $13,500 a ton. And recently it hit an all-time record of around $37,500 a ton. This is a function of a number of things, but, it's growing demand. It's people wanting to work from home, wanting better computer connections. The bulk of tin use today is all in electronics in the form of solder. And, as world economies make this shift towards electrification, that demand is going to increase. From the production side, you're looking at, a sector that's been underinvested for the last 20, 30, 40 years. So there aren't really that many good new tin projects ready to come on stream. And it's not like you can just, flick a switch and start tin production. It's a long process. And, when you look at where a lot of tin comes from, there's growing awareness of the impact that some of these operations have. So I think we're in for a period here where demand is going to continue to grow, and the ability of the industry to supply increasing amounts of tin is going to be challenged. So I see, the next 5 to 10 years being a very good opportunity certainly for the UK and Cornwall to capitalize on that.
And Dan, what's the perspective on the lithium market going forwards?
I mean, that's the same as what I didn't describe ahead there, but in terms of lithium at the moment, we've gone from a period of oversupply and low pricing to where there's been a little bit of supply side discipline. Certainly in the space of spodumene, we've certainly seen that prices have gone from $300 a ton last year up to spot trading at $2,500 a ton this year. So quite an increase on the spot market. Contractually, it's still trading around $480 a ton. So the trend is in the right direction, but there's a disconnect between contractual pricing and, of course, spot market at the moment. And same with lithium chemicals. You know, we've seen with carbonate battery grade and hydroxide battery grade. I mean, it's a relatively opaque market, but looking at the trade stats, the trend is in the right direction. And we are certainly entering a period of incentive pricing to try and encourage raw material supply to develop, because we do see a forthcoming undersupply.
Let's just move on a little bit. You know, I think it was Will who said the way that the Chinese have managed their economy and their supply chains. And we're living at a time where the UK government, if you believe everything which is coming out of politicians' mouths at the moment, is sounding increasingly non-interventionist with regard to business. Richard, you said you just don't turn a switch and there's a tin mine. Let's just talk a little bit about the barriers to entry in mining. And is what politicians are saying a reflection of the truth, or is there actual support available to companies like yours, be it from the UK or from the EU? Richard, can I come to you first? Because I understand you've had quite a bit of, well, let's start with encouragement, but you tell me, what kind of barriers to entry are there, and what kind of support, if any, are you getting in Cornwall?
Barriers to entry, it's such an enormous question. Let's start, at the basics is permitting. To permit a new mine takes time. You've got to find a new project that has the economics and the scale to support the investment. And then you need to go through the permitting process. And, in the UK or say North America, some of these permitting processes can take a long time. Now, we are fortunate in Cornwall in that we have a very supportive local government that recognises the potential economic impacts that, say, putting South Crofty into production would have for the region as a whole, which currently is really dominated by tourism and the service sector. So that would really add to balancing out the economy. And more importantly, it adds and supplies highly skilled, well-paid jobs to an area that really needs it. From Cornwall Council themselves voted a couple of years ago to invest in the company. So I think that financial support is there and willing. Has that translated to central government? I think there's a growing recognition. We've talked about it already. The importance of security of supply, domestic supply. One of the key terms currently in the UK is a circular economy, where you can produce your own materials, you can manufacture it. You've got the upstream processing, manufacturing, and then you can build that into the recycling, so that you've got the whole sector for certain minerals. If you've got an area like Cornwall that has an abundant and long, rich history of mining things like copper, tin, and now potentially lithium, you can really help contribute to those aspirations in the UK. So I think it's a bit slower to get the uptake at central government, but the recognition is growing, and we'll keep pushing and lobbying for that support from Westminster.
Will, can I come to you? I mean, are you getting support, financial or otherwise, or encouragement from either the UK government or from the EU?
I think in the UK, I mean, our focus has really been on supporting the growth of Hypermag and together with the University of Birmingham has seen a lot of support from UK government. I mean, we've two Innovate UK funded projects, one to recycle rare earth magnets from loudspeakers that's just completed, very successful project and strong support. And currently we have a project focused on producing and designing a recycled rare earth magnet into an electric Bentley. And there's a number of partners involved in that, including Unipart. So, and there are other aspects we're looking at as well to further grow the business in the UK and elsewhere. So I would say, yes, we are seeing that support in the UK from a sort of recycling perspective. And in the EU, Hypermax technology underpins a very big EU project, SUSMAGPro, which is focused on producing various sort of recycled projects. And in terms of Malawi and what we're doing in Poland, that's certainly something we're working on. Yeah, so I'd say that's work in progress.
Okay, so the Prime Minister might not be being as I don't know, presenting a clear picture when he says that the government is not intervening and not helping business. They clearly are giving some help. Dan, I come to you because you're looking at building your factory in Europe. Is the EU interested in supporting you in that?
Yeah, I can say, Tim, actually, we've looked at both the UK and Europe. So just to build on what Richard said in the UK, I mean, there is a lot of funding here. They are looking at all aspects of the supply chain. You know, there's the Automotive Transformation Fund, where there's certainly a keen interest to create jobs, to fund businesses and to create new industry here, as long as you're thinking about circular economy. And that goes beyond just the supply chain. It's what can we do with the waste products as well. And what we're doing about energy. You know, one great thing about UK and Europe is the overabundance of offshore wind at the moment. I mean, that's a lot of energy. Obviously, it peaks and troughs. So people that are big consumers of energy are in a pretty stable state. You know, we're there to absorb some of that overuse of supply. So we found, you know, strong support in the UK, and then moving to the Europe as well. Again, there are funds available. I mean, through InnoEnergy and the Battery Alliance platform, they're starting to look beyond the battery technology and into the supply chain now. We've seen raw material projects within Europe get funding. And of course, it's something that we're looking into as well. And there's certainly a keen interest to build conversion facility. You know, what's important for us there is the fact that these industries underpin the wider aspirations to become a powerhouse in electric vehicles. So they're starting to realize that, you know, you have to support the whole supply chain in order to flourish at the top end of the market.
I'm sure I saw Will's eyes light up there when you talked about the large number of wind turbines offshore and all those magnets that they need, Will. You mentioned waste and recycling, Dan, which leads me into my next point, which is, you know, we can't have a discussion these days around the mining industry without those three letters ESG and how sustainable we need to be. So let's just talk about sustainable extraction. And I want to come to the two mining companies, really. When you're looking at moving into production, gentlemen, how are you going to be implementing sustainability models or practices into your mining operations? Will, can I start with you, please?
You know, I think from you know, in Malawi, we've always, you know, had very strong relationships and focused on supporting the local communities, engaging with them and empowering the local communities. So that really hasn't changed. And you know, as the project moves towards development, that will continue. And you know, we've been looking at sort of high impact projects across a range of you know, aspects. You know, I think in terms of the actual project development, we have had, you know, a very strong focus on how we can reduce the sort of carbon impact. And we've been looking at, we're looking at a solar storage grid power to supply the power, and Malawi has hydropower. We're also looking at wind as a potential option, and we're working with our engineers at the moment on what the most efficient scenario is. So as much as possible, we'll focus on renewables. And then in terms of utilization of waste products, you know, we'll produce byproduct gypsum, which we're looking to, you know, use in Malawi. And we're also looking at where we can maximize the efficiency of the byproducts from the mine production. So, and then from a recycling perspective, you know, that has become a, you know, really key part of the business. And we, you know, I think it's a very exciting opportunity because it really complements what we're doing on the sort of primary side of things. And I think there's a lot of growth potential. And it's not, you know, not just in rare earths. I'm sure it's across a whole range of commodities. And So that's a really interesting sector, and it really sort of ties into sustainability and circular economy.
Richard, how are you going to make your mining of copper and tin in Cornwall, how are you going to make that sustainable?
Look, it's a really interesting topic because ESG has become a very dominant theme in the investment world. And the opportunity that we see and the positives are, take for example, South Crofty, you've got an area that was intensively mined for hundreds of years. There's a river that runs through the middle of the property called the Red River, which currently has contaminated mine water flowing into it. So the opportunity on the environmental side for us is to actually treat that water, improve the quality of the Red River, which drains into Gwithian Bay, one of the prime beaches in Cornwall. And I think that's to the benefit of the region. If we can put in long-term solutions and remediate some of the historic remnants of mining in the past, I think that is something really positive that new mining operations can contribute to. On the social side, we've already talked about the job creation, the training that goes with it. What we're looking at, I think some people still have this perception of Cornish mines being small and very labor intensive, but we're looking at an underground operation that adopts very modern mining technologies, low impact on surface, and because of the volume of voids underground, any of the waste material that we do generate from mining can be disposed of underground rather than permitting a tailings pond. So, I think we tick all of the boxes, but on the greater scale, I think the end users and the investors are looking at, say, electronic companies and saying, where are you getting your products from? And what's the impact of, say, tin mining in Asia on the environment? Or, is there exploitation of child labor, or is some of the proceeds from some of these operations going to fund conflict elsewhere? So, we see an opportunity here for Cornwall to be a supplier of choice for tin into Europe and North America, which don't really have any primary tin production. And that's, I think, really important to look at is the opportunities for the UK. And then, the add-ons would be the recycling part of it, the processing part, the refining. And so, yeah, I think it's a great opportunity for us.
Let's make sure you have no conflicts with Devon in that case, because that might not help. You mentioned technology there, Richard. I think one of the themes emerging is the fact that demand may well outstrip supply in the next few years for all of these, let's call them electronic revolution, EV, metals, minerals. If demand is going to outstrip supply, we're going to need to find more sources. There's going to be a need for greater exploration, I suppose. To what extent can new technologies play a part? People watching this program may think of mining as an old-fashioned industry, a dirty industry. Well, we know that's not the case. But let's just talk about what roles new technology can play, if anything, in discovery of new assets, new resources. Will, is that something you're looking at and you're utilizing?
No, absolutely, and we were part of a big Horizon 2020 project, High Tech Outcarb, which was looking at developing, led by the Camborne School of Mines, looking at developing geological models for for carbonatites, rare earth deposits, and certainly that. And Malawi is, and one of the reasons we're part of that is Malawi is really, it's a sort of natural laboratory for rare earths and carbonatites. There's at least 4 major carbonatites in Malawi. And so that was a very productive, interesting program looking at developing the geological models around these carbonatites. And in parallel with that, over the last sort of 10 years, we've completed a lot of exploration in Malawi, developing exploration methodologies for carbonatites. And it's not necessarily different ways of exploration. Really it's geophysics and satellite imagery, It's how it's interpreted, and we have the perfect model being our project, so we can look at the responses to the geophysics and the satellite imagery and apply that to other parts of the country. So I think that's really been our focus from an exploration perspective.
Dan, not so much about exploration, but in the processing of lithium, I mean, are you going to be using new technologies, or is it a fairly tried and tested process?
Yeah, in terms of the actual process, it's tried and tested. We want to be a little bit careful not to move away from doing what we know can produce battery grade. I mean, there's a lot of new technology out there that's interesting. And if it works, obviously, it's going to revolutionize the industry, make it a lot cleaner. So we are certainly interested in that as we look at growth in the future. But in the first instance, no, we want to make sure we can produce proper battery grade. That said, though, we're not exempt from the ESG, and in processing is equally as important. We're dealing with a lot of chemicals, off gases, and of course byproducts that we also have to put into new use, much like the mining assets. But what I would say, where we are looking at technology, certainly on the off gases, is the carbon reduction, being able to take that. We're looking at technology at the moment that can convert the off gas into methanol, which can be used in ships, I believe, these days. So we're looking at technology that can certainly help on the cleaning of around the main infrastructure, but it's more on the environmental side.
And Richard, let's just come to you. Looking in Cornwall, where you're going to be mining copper and tin, exploring more as well down there. Has new technology got a role for you? And if so, what technologies are you looking at?
Yeah, just to repeat what Will said, satellite technology, remote sensing technology has come a long way in the last 20 years. Cornwall's interesting. It's probably one of the most heavily mined regions in the world, but it's probably one of the least explored, because a lot of that mining took place a long time ago, and modern approaches to mineral exploration have not really been applied. You also look at new technology and say, well, what else do we have in Cornwall aside from copper and tin that has value? And I think that's part of the process that's going on at Camborne School of Mines and British Geological Society right now, is to identify other elements that occur in relation to the granites in Cornwall that have value and can also contribute to this whole concept of domestic supply of materials for the technology age. On the mining side, I think the big driver here for regional supply, domestic supply is really a function of reducing your carbon footprint for everything. And in the local environment, say mine at South Crofty, there's been advances in what's called ore sorting, which means that you can separate your waste from the ore underground rather than hoisting lots of tons to surface. That consumes more power. By going through that process, it means your power consumption is less, you're processing less tons, you generate less waste to dispose of. So all of these things play a role. The other thing that we see, certainly at South Crofty, is that there is, in some instances, warm water that is present in the project. And we can use heat exchangers to actually extract that heat and use that to heat the offices or local surrounding businesses. So there's a lot of opportunities in addition to just mining tin or copper that we can look at that can contribute to the local environment.
I'm going to finish this session with a quick fire round, if I may. And I think I know what the answer is going to be before I even ask the question. But as we sit here, we're listening to governments and companies talk about having net zero economies when it comes to carbon. Without the green revolution, metals and minerals that you guys are involved in producing, can we get to a net zero economy? Richard Williams, can we get there?
Well, I think everybody can contribute to it. And, I just touched on it there with, reducing your carbon footprint. If you can produce your materials domestically, then that's going to have an impact on reducing carbon footprint. If you build your own circular economy, it's the extraction, the refinement, the manufacture, and the recycling all within the UK. That's all going to contribute to it. So yes, I think we can get there, but it's going to take a concerted effort, lots of research and development, but it is possible.
Dan, can we get to a net zero economy without your lithium?
Well, and Richard's right. Everyone has a role to play, and we can definitely bring that down. But without any revolution, you need new technology, new materials, new minerals, and yeah, I think battery minerals are going to play a very important role. So I'm going to say no. We need the raw materials.
Will, can we get to a net zero economy without your rare earths?
Well, I mean, some 90% of electric vehicles use rare earths, so certainly from that perspective, you know, it's clearly essential, and for offshore wind as well, for direct drive wind turbines. But it's not only the raw materials. I think what's also needed is the sort of integrated supply chains as well, and the recycling. I think recycling will, at the moment, less than 5% of rare earth magnets are recycled from end of life components, and that, you know, if you look at the PGM sector, that should be 25%, for example, 30%. So I think that has a definite role to play in the transition.
Well, gentlemen, that brings us to the end of this session. Let me thank you on behalf of the viewers. Thanks to Dan Bloor of Livista, Richard Williams of Cornish Metals, and Will Dawes of Mkango. And now let's just get a view from the market. I'm delighted that we're being joined by John Meyer, the mining analyst and partner at SP Angel. John, on the panel today, we've got miners who are involved in copper, lithium, nickel, rare earths. Can I just come to you quickly for a view on each of those? How is the market perceiving them? Let's start with copper.
Yeah, the market for copper has been tight for a while now. Having been a fairly loose market for many years, it has certainly tightened up. And much as the Chinese government would like to see a bit more copper floating around in markets to depress prices, stocks keep flowing out of LME and Shanghai warehouses, and prices keep coming back up. So the Chinese government has on a number of occasions tried to force the price down. They've even suggested price limits and quotas, and they've told certain parts of Chinese industry to hold back on purchases. But whatever they do, the price, the market tightens and the price just picks back up again. So I think we've probably seen the last of a certain type of action from the Chinese government for now. In the meantime, still ongoing issues at the major supply nations, Chile and Peru. Peru has a new president. We're all waiting to see what he comes out with to incentivize the copper miners. And similarly in Chile, we're also seeing that newly elected representatives in the House, in the upper legislative house in Chile, they've been elected on a mandate of effectively raising taxes and squeezing a bit more out of the mining industry. And what this has served to do is to paralyze investment into these new areas. And that means there's not quite as much new supply coming through as might have been expected. So whilst there are some experts who were out there expecting a certain amount of new supply to come on this year, it's not looking so good. And at the same time, we've got this interesting situation in China right now where they're suffering power shortages, and they've had to ask many industries, particularly across the smelting and refining sectors, to cut back on the production that they're doing. And I wouldn't expect this to hit copper too hard, but it is going to have some impact. Let's
turn our attentions now to lithium. What's your view on lithium markets and lithium appetite among investors?
Well, lithium is a classic game of musical chairs when it comes to miners and consumers trying to figure out where the surplus is. And in fact, the market has swung from surplus material and low prices to suddenly a deficit of material, and lithium carbonate prices more than doubling over the last year. In fact, almost quadrupling, in fact. And so what we're seeing is the lithium processors are getting their hands on whichever companies they can. So Ganfeng, which is the big lithium processing business in China, has already staked its claim on Bacanora Minerals, on Firefinch in Mali, and a number of others. We've seen Piedmont, which is aligned with Tesla, and has a few problems with its lithium project in North Carolina, has done a deal with Iron Ridge Resources, and so we're seeing is the mines that are coming through in the next few years are already being locked up by the major consumers. And as what happens in any game of musical chairs is a chair will be withdrawn and somebody will be left without lithium. So the challenge is for the market to come through with new sources of lithium supply and to demonstrate that it can bring those sources into the market in the next few years.
What's your view on the state of the nickel market?
Well, nickel prices are quite high at the moment, just over $18,000 a ton. That tells you the market's pretty tight. And clearly the massive expansion of gigafactories and mega factories around the world is having an impact there. Most nickel in the world is actually consumed in the production of stainless steel. And so what we've seen is with Chinese property developers rushing to finish properties and sell those on. I mean, this connects in with the story of Evergrande in China, which could be the world's largest property business collapse, and would be a very difficult thing for the market to absorb. But it looks as if the Chinese government, whilst allowing that business to collapse, I think is going to create an orderly unwinding of Evergrande. In fact, there's a sale on at the moment for their property management business. So maybe that will help to sort that out. But in the meantime, lots of stainless steel fixtures and fittings are being produced at a rapid rate in China. That's consuming a lot of nickel, and the battery factories are coming along and saying, hey, we need nickel hydroxide, nickel chemical products that we can put into batteries as well. So it's a very big shift in the demand pattern for all these battery metals, and nickel is the heaviest metal in lithium ion batteries, so there's a bigger tonnage going into that than anywhere else.
When we have these kinds of discussions, we tend to focus on the batteries for electric vehicles. Another key component, be it for vehicles or for wind power, of course, is the magnets, and that leads us into rare earths. John, what's the view on the rare earth situation right now?
Well, we're all really quite concerned about the rare earth market at the moment. China has restricted power to the mining industry and the smelting and refining industries. And if that hits rare earth production, then exports of neodymium, praseodymium, terbium, and dysprosium could easily get cut, because China Inc. is going to give priority to domestic producers of permanent magnets and other magnets for electric vehicles and all the other bits and pieces that depend on them. So if the Western world is cut short, where are we going to get this stuff from? So there are a number of companies listed on the AIM market in the UK and elsewhere around the world that are looking to bring projects on, but really there's very few of them, and we just can't see how this is going to work.
We talk about things like lithium and nickel and copper. One of the metals we often forget to discuss is tin. Has tin got a key role in this whole EV green revolution?
Well, tin is critical for soldering all the things that get soldered on electric circuit boards, the connections between cables and vehicles. It's absolutely essential, and the more circuit boards you create, the more tin you use. Now, the industry has been very good at thrifting the amount of tin, but the negative side of that is it's less economic to recycle those circuit boards, and I think it's harder to get the tin back out of them now. So the irony is that by using less tin on those circuit boards, you're building up a problem for future generations. In the meantime, we know that there's a huge amount of manufacturing growth in the equipment, machinery, PlayStations, everything that uses circuit boards. In fact, your average car now uses so much more electronics than it ever used to, and they can't just change the design of those vehicles either. So they're having to slow the production lines down because they can't get enough chips. And remember, those as the chip shortage eases, that's going to create more demand for tin on those circuit boards. So there's so much growth going on in the world in the manufacturing sector that is drawing and driving demand for tin, and yet there aren't any new tin mines.
One of the things we've talked about, John, is the role that the Chinese are playing in this global debate about access to and supply of EV metals and minerals. In your view, is this something that the private sector can handle alone, or do we need to see more involvement from governments, from governmental organizations, from the EU, talking about the infrastructure? Can we leave it to the companies, or do we need more government action?
Well, normally I'm in full support of free markets and less government intervention, but we are in a situation where we're having to compete with China. China is pumping a lot of money and support into its electric vehicle industry, into the battery manufacturing side of it, in fact, into the entire supply chain, with a lot of parastatal companies, and the Western world needs to somehow keep up. And our system it does not seem to be able to do that. So I think with the right sort of encouragement, and we see certain funds that are accessing US infrastructure money and European infrastructure money coming in and now starting to invest in companies like Brazil Nickel and others to bring to help to accelerate what the free markets would normally do in their own time.
John, you're at the sharp end for the mining industry when it comes to raising capital. You talk directly to institutional investors. What's the appetite like now? Are people eager to invest in the mining industry?
Well, the institutional investors are still getting to grips with this, and I think they're coming pretty late to the party. Many of them had raised their market cap thresholds. They'd kind of gone into hibernation whilst they were protecting their funds. Now they really need to come out and get more aggressive and start supporting these up and coming junior mining companies, because these are the companies that are going to be the stars of the next generation.
That was John Meyer from SP Angel giving us the market view. John, thanks very much for your contribution.